Welcome to a journey through the insightful world of VIJAY KEDIA, a renowned investor whose words have inspired countless people in the business and investment community. In this video, we'll explore 27 of his most impactful quotes, each offering a unique perspective on investing, business, and life itself. Whether you're a seasoned investor or just starting out, KEDIA's wisdom provides valuable lessons that go beyond the stock market. Let's begin by understanding who VIJAY KEDIA is and why his thoughts are so widely respected. KEDIA's first mantra is simple yet profound: invest like a bull, sit like a bear, and watch like an eagle. This quote captures the essence of long-term investing. It's about being bold when making decisions, patient while waiting for results, and always vigilant in observing market trends. The combination of these qualities can help investors navigate the ups and downs of the stock market with confidence and resilience. As we move forward, keep this mantra in mind. It's a foundation for many of KEDIA's other insights. According to KEDIA, investing is like yoga. Body, mind, and soul have to be aligned. This analogy reminds us that successful investing requires harmony between knowledge, emotions, and discipline. Just as yoga brings balance to life, investing demands a holistic approach, where research, patience, and self-control work together. By aligning these aspects, investors can make better decisions and avoid common pitfalls driven by fear or greed. KEDIA's insight, market rewards you as per your perception, emphasizes the power of mindset in investing. The way you interpret market signals and trends can greatly influence your outcomes. Optimism, caution, or fear can all shape your investment journey. By cultivating a positive and informed perception, you position yourself to recognize opportunities and avoid unnecessary risks. This quote encourages us to be mindful of our attitudes and beliefs as we engage with the market. His witty style, KEDIA says, only two people can buy at the bottom and sell at the top, one is God and the other is a liar. This quote humorously addresses the myth of perfect market timing. No one can consistently predict the exact highs and lows. Instead, focus on sound strategies and long-term growth. Accepting this reality helps investors avoid the stress of chasing perfection and instead concentrate on steady progress. KEDIA shares, the whole purpose of choosing to invest as a career is to let the management be constantly worried about his company and let yourself sip your wine, but the opposite happens. This quote highlights the importance of trusting the management of the companies you invest in. Ideally, investors should be able to relax knowing their investments are in good hands. However, many find themselves anxious. The lesson here is to choose companies with strong leadership so you can invest with peace of mind. Face the story behind the stock, not the money on the table. Money will make you rich, but the story will make you wealthy. KEDIA urges investors to look beyond immediate profits and focus on the underlying narrative of a company. Understanding the vision, mission, and growth potential can lead to lasting wealth. This approach encourages deeper research and a long-term perspective rather than chasing quick gains. KEDIA distills the essence of a successful investor into three qualities: knowledge, courage, and patience. Each is vital. Knowledge helps you make informed decisions, courage allows you to act when others hesitate, and patience ensures you stay the course. Balancing these traits can help investors weather market volatility and achieve their financial goals over time. KEDIA compares market cycles to emotions. A bull market is very much like being in love. You don't realize its value till it's gone. This analogy reminds us to appreciate favorable market conditions while they last. It's easy to take success for granted, but wise investors recognize and value good times, preparing for inevitable changes ahead. The quote, "In markets, stupid action does not have equal but severe opposite reaction." KEDIA warns against reckless decisions. The market can punish poor choices more harshly than expected. This serves as a reminder to act thoughtfully, considering both risks and rewards before making moves. Caution and analysis are essential for long-term success. KEDIA humorously introduces the concept of VIJAY and GR cap, companies that only shine during good times. He notes, there's large cap, mid cap, small cap. There's also a VIJAY and GR CAP. More than 4,000 out of 6,000 companies fit in that category. They show up only in the good times. Be careful. This is a caution to avoid companies that lack resilience and only perform well during market booms. Regret is a lifestyle disease of equity investing. KEDIA's words highlight how regret can haunt investors, often leading to poor decisions or missed opportunities. Instead of dwelling on past mistakes, it's healthier to learn from them and move forward. This mindset fosters growth and resilience both in investing and in life. KEDIA uses a playful metaphor. When kids come on the dance floor, it's time for elders to go to the bed. This suggests that when inexperienced participants flood the market, it may be a signal for seasoned investors to step back. Recognizing market sentiment and knowing when to exit can be as important as knowing when to invest. Investment is somewhat like cricket, where you change your game plan as per the format. KEDIA draws a parallel between investing and sports, emphasizing adaptability. Just as cricket players adjust strategies for different formats, investors must adapt to changing market conditions and opportunities. Flexibility is key to long-term success. KEDIA warns, don't always trust what you see. In a bull market, even a duck looks like a swan. This quote reminds us that appearances can be deceiving, especially during market booms. It's important to conduct thorough research and not be swayed by surface-level success. True value lies beneath the surface. According to KEDIA, three qualities of a good management: honest, hungry, and smart. These traits are essential for company leaders. Honesty builds trust, hunger drives ambition, and intelligence ensures wise decisions. When evaluating investments, consider the management team's character and capabilities. KEDIA states, your investment belongs to the market and your profits belong to you. This highlights the reality that while your money is at risk in the market, the gains you make are yours to keep. It's a reminder to protect profits and not become emotionally attached to investments. KEDIA observes, if the management has not performed well in their bad times in the past, chances are they will not perform well in their good times in the future too. This underscores the importance of evaluating a company's leadership during challenging periods. Consistency and resilience are key indicators of future success. With a touch of humor, KEDIA warns, trading is injurious to your wealth. If you are smoking, you may die in 20-30 years, whereas by trading, this may happen the very next day. He stresses the risks of frequent trading compared to long-term investing. Patience and discipline often yield better results than chasing quick profits. KEDIA's quote, "Rome was not built in a day, but Hiroshima and Nagasaki were destroyed in a day," is a powerful reminder that building value takes time, but destruction can happen quickly. This applies to both investments and reputations. Patience and careful planning are essential, while rash decisions can lead to rapid losses. KEDIA shares, "When we are right, we earn. When we are wrong, we learn." This positive outlook encourages investors to see mistakes as opportunities for growth. Every experience, whether profitable or not, contributes to your knowledge and future success. Embrace both wins and losses as part of the journey. KEDIA explains, investing is a business, investment is a project, and investor is a promoter. This perspective frames investing as a structured endeavor where each role has its responsibilities. Treating investments like business projects encourages discipline, research, and a professional approach. KEDIA advises, better to lose money in a good company rather than making money in a bad one. This highlights the importance of quality over short-term gains. Investing in reputable companies may sometimes lead to losses, but it's safer than risking money with unreliable firms. Prioritize integrity and fundamentals. KEDIA uses another cricket analogy. If you keep trying to hit a 4 but you keep on getting only one run, then chances are when you will hit a 6 you will get caught. This suggests that chasing big wins without adapting your strategy can backfire. Consistency and patience often yield better results than risky moves. Don't learn literature from a history teacher. KEDIA's advice is to seek knowledge from those with relevant expertise. In investing, this means following credible sources and mentors who have real experience. The right guidance can make all the difference in your journey. KEDIA shares his multi-bagger mantra: find companies which are small in size, medium in experience, large in aspiration, and having an extra large market potential. This formula helps identify businesses with the potential for exponential growth. Look for ambition, scalability, and untapped markets when searching for your next big investment. KEDIA notes, a bull doesn't go wrong in predicting an upswing in a falling market. He goes wrong when he predicts a downswing in a rising market. This highlights the danger of going against the prevailing trend. It's important to align your strategy with market realities and not let overconfidence cloud your judgment. KEDIA's advice, read not only between the lines but also what is not written, encourages investors to look deeper than surface information. Critical thinking and intuition are essential for uncovering hidden risks and opportunities. Don't just accept things at face value, dig deeper for true understanding. Goodreads and similar platforms offer a space for investors and readers to share insights, quotes, and experiences. By engaging with a community, you can learn from others, gain new perspectives, and stay motivated on your journey. KEDIA's quotes are just one example of the wisdom you can find when you connect with like-minded individuals. As we wrap up, let's reflect on the key lessons from VIJAY KEDIA's 27 quotes. His wisdom covers everything from patience and adaptability to the importance of mindset and management. Whether you're investing in stocks or pursuing personal growth, these principles can guide you toward success. Remember, investing is a journey. Embrace the ups and downs, keep learning, and stay true to your values. Thank you for joining us on this exploration of KEDIA's timeless advice.